Jeff Bezos quietly backed a $2.6 billion AI startup, and it just announced partnerships with Nvidia and Meta to solve the biggest bottleneck in artificial intelligence: chip materials. This is the story of how one startup could reshape the entire semiconductor industry. The AI industry is running into a wall. It's not just compute power or electricity, it's the raw materials needed to build next-generation chips. Memory chip shortages are already threatening to cut short Apple's breakout product cycle, according to recent reports. Enter this Bezos-backed startup. It's developing new chip materials that could bypass the current memory bottlenecks. Nvidia and Meta are both partnering to test these materials in their next-generation hardware, a massive vote of confidence. The startup raised $2.6 billion, with Jeff Bezos as a key backer through his investment vehicle. That's one of the largest private rounds in the AI hardware space this year. The money is going towards scaling production of a new type of semiconductor substrate. Nvidia's current market cap sits at $4.94 trillion, with shares trading around $198.98. But the stock has fallen sharply from 2026 highs. The partnership with this materials startup could be the catalyst that reignites growth, or at least protects their supply chain. Meta is equally invested. With their massive AI infrastructure build-out, they need reliable access to advanced chips. By partnering on materials R&D, Meta is trying to secure its supply chain years in advance. The memory shortage isn't just a rumor. CNBC reported that memory shortages threaten to cut Apple's breakout product cycle short. This is the same type of shortage that could cripple AI chip production if new materials aren't found. The semiconductor trade has been volatile. JP Morgan analysts noted that hedge funds have likely finished selling their positions in tech and chip stocks to reduce debt. That selling pressure may be easing, setting up a potential rebound. Goldman Sachs traders are on pace for a record year. The investment bank is capitalizing on the volatility in tech and semiconductors. Meanwhile, the broader market is watching the 10-year Treasury yield hover near 2007 highs above 5.2%. This Bezos-backed startup isn't just a science project. The new materials could reduce chip manufacturing costs by up to 30% while increasing performance. If successful, it could disrupt the entire supply chain dominated by TSMC and Samsung. Meta's revenue forecast recently disappointed, causing a 9% stock slump. But their commitment to AI infrastructure remains unwavering. Partnering on chip materials is a long-term bet that AI hardware costs will come down. Nvidia's valuation is a hot topic. With a P/E ratio of 30.74 and a dividend yield of 0.14%, some analysts argue it's fairly priced. But a breakthrough in chip materials could justify a higher multiple as margins improve. The startup's technology focuses on a new type of substrate that allows for denser transistor packing. That means more compute power per square millimeter, exactly what AI training models need. Apple's supply chain is already feeling the heat. Memory shortages could delay the next iPhone cycle. This startup's materials could eventually be used in consumer devices too, not just AI servers. Jeff Bezos has a track record of backing transformative deep tech. From Blue Origin to this AI materials startup, he's betting on the physical infrastructure of the future. This $2.6 billion round is his largest single investment in hardware. The partnership structure is unique. Nvidia and Meta are both providing engineering resources and testing facilities in exchange for early access to the materials. That de-risks the startup's path to commercialization. Meanwhile, Coinbase reported Q2 earnings that disappointed, sending shares down 6.9% after hours. The crypto exchange is facing headwinds from regulatory uncertainty and declining trading volumes. Robinhood also reported earnings that topped Wall Street estimates, but the stock is trading around $86.56, down from its highs. The company faces competition from SoFi and others, but its retail user base remains strong. Goldman Sachs stock recently hit $1,015.77, giving it a market cap of $300 billion. The bank's record trading revenue is partly driven by the volatility in tech and semiconductor names like Nvidia. The 10-year Treasury yield surge above 5.2% has been a headwind for growth stocks. But the S&P 500 held flat in July, suggesting investors are rotating into value and materials plays, benefiting this startup's narrative. Microsoft also reported strong earnings, soaring 8.5% after disclosing steady 2026 capital expenditures. Their Azure cloud business is a massive consumer of Nvidia chips, so any materials breakthrough benefits them too. The startup isn't just about memory. It's also developing interconnects that reduce latency between chips. That's critical for large-scale AI models that need to communicate across thousands of GPUs. One of the biggest risks, scaling new materials from lab to fab, is notoriously difficult. Many startups have failed at this stage. But with Bezos's capital and Nvidia's engineering muscle, this one has a better shot. If successful, the startup could go public within 2 years. Bezos-backed companies often have a fast track to IPO. That could be a major liquidity event for early investors and a new public stock to watch. The broader AI chip market is expected to grow from $50 billion to over $200 billion by 2030. New materials are the key to sustaining that growth. This startup is positioning itself at the center of that megatrend. Competitors aren't standing still. TSMC and Intel are investing billions in their own materials research. But a nimble startup with Bezos's backing and Nvidia's partnership could move faster than the incumbents. What does this mean for you as an investor? Watch Nvidia's supply chain announcements. If this startup's materials are adopted, it could reduce Nvidia's cost of goods sold and boost margins significantly. The memory shortage is a ticking clock. Apple's product cycle is just the first domino. Without new materials, AI progress could slow. This startup is the most promising solution on the horizon. If you enjoyed this deep dive into the biggest AI materials story of 2026, hit that like button and subscribe for daily updates on the stocks and startups that matter. We'll be tracking this startup closely.